We are back with more of My Southern Home, and I'm here with Jeff Ratanapool with Stockton Mortgage. And Jeff, I'm really excited to talk to you today because the interest rates have just hiked up 3 points, and it's really important for the homeowners to know, the home buyers, what it means to them.
Yeah, it's been a rapid rise in a very short amount of time. But if you look back at pre-pandemic levels, one of the ways the government was able to support the industry and the real estate and mortgage is they took borrowing costs really low, 100-year lows. So for about 18 months, borrowers were able to get in the twos for their interest rates, but you can't sustain that long term because ultimately what's happened is we've seen inflation. So inflation is where your dollar just doesn't buy as much, and it's run rampant across all industries and segments. So your rent's higher by $100, your gas costs more, your groceries cost more. And the way that the government combats inflation is by raising interest rates. And typically there's a relationship between short and long-term rates that's opposite of each other. But right now what we've seen since January of 2022 is both rates are rising. Now the shorter term rates haven't really gone up a whole lot, but the Fed has threatened to raise those. And what we've seen, the reaction to all markets is mortgage rates are moving up, interest rates are all going up, and that's how we got in the situation. But as I look at that, Kimberly, the mortgage rate today, or in the month of April, was around 5.25% to 5.5%. That is still really, really inexpensive long-term money. If we look back at the history of rates in the 80s during times of high inflations, we've talked about it on your podcast, our parents got 14, 16, 18% in rates. The highest they've been in the last 20 years is 8.25%. And so that's still affordable. So when you look at a 2.5, 30-year fixed mortgage versus a 5.5 today, if you're borrowing a couple $100,000, your payment's only gone up $150 a month.
Well, and one of the things that's so important for especially new home buyers that are younger to remember is that we have seen these rates before, and people were able to buy property on these rates. My mom paid 22% on her home in the 1970s. Now, homes were a lot less expensive then, but when you're talking about the difference of $100 and $200, now that's a lot of money because you only have so much money that you make. And when you have kids and all the other things that you have to spend money on, but at the end of the day, someone is building wealth off that property that you're living in. So if you're in an apartment, then that $200 is making someone else richer, not yourself. So you should always invest in yourself.
Yeah, that's totally true. I heard a very wise person once say you can't lose with dirt. If you buy dirt, you buy land, that eventually that will be a return for you for the money you're investing. And so it's well said to your point, and you're absolutely right. But again, the amount of change in the payment is probably not enough to deter someone, because even if they decided not to buy today, their rent is probably going to be $150 to $200 higher than before they started looking.
And you're still paying more.
Correct.
And not owning something.
That's right.
My mom used to always say, and she still says it, that if you buy a home, you stay there, you pay it off, and you always have a place to live, and no one can kick you out.
Yeah, that's well said. Your mom's a smart lady.
And there's two rules of thought. Not everyone believes in that. They believe in building wealth, selling, and buying more. But I've been in the same condo since I was in my 20s, and it's almost paid off. So I've kind of followed that philosophy in a way.
And in the grand scheme of things, we really just have seen a sticker shock from January of 21 to now. But in the whole perspective of rates, 5.5, even 6% is still very inexpensive money to have locked in for 30 years.
And Jeff, don't you think that some of the sticker shock is that we're so used to the low rates and we weren't expecting them to go up so fast? So in this world that we're living in, where you have multiple offers and you know that you're pre-qualified and you're not really paying attention to that because that's done, and if you let that lapse, then that's where that sticker shock happened, because they had to pre-qualify at a higher rate.
Yes, absolutely. And a little bit more detailed is anyone that got pre-approved in January at 3.5, if it took them 45 to 60 days to get a contract accepted, which it does, then they came back to find out, oh my goodness, my rate is now 5.5. And I think we saw the biggest shock there in the March to April range. I think it's a little more realistic because things are settling down a little bit, but they're settling down in the high end of the fives. And so I think people are over that initial part. But we just want to. I'm grateful for the opportunity to come on to share with everyone is don't panic. You know, the mortgage rate and the affordability of the payment is still going to be there. It's going to be relative to rent, and you're still going to be able to get a nice home and have a reasonable payment.
So we're ending spring, we're going into summer. What do you think homeowners or home buyers should expect in the next 60 to 90 days?
I think more of the same of what they've seen. We still have an inventory issue, which means that, you know, there are still more buyers than sellers, so it's going to still be very competitive. And with this rate increase, there might be some that back off a little bit because they don't want to, you know, finance at that higher interest rate, but that's not going to deter the market. If you look at all the analysts and all the things they're calling for, 2022, they're predicting will still be the largest year in purchases in real estate in history. So I think just ignore the news, go out, find the house you want to buy, make sure you can afford the payment and you're pre-approved with your lender, and then go take a shot.
Well, and you know, make sure you can afford it is a very good point, and that goes to the team that you surround themselves with. So if you're with a loan officer like yourself and you have a realtor that has the best interests of you at heart, then they are going to prepare you for all of those payments that you have coming up with this new property.
Absolutely. And a good lender is not going to put you in a bad loan. They're going to know that you're a client for life and they're looking out for your financial interest. And you might be able to afford a higher payment, but they will agree with you that if you set a limit on what you want to pay, that's the way they'll work. And that's what a good lender will do.
All right, well, thank you so much, Jeff. I really appreciate it.
Thank you for having me.
We'll be back with more of My Southern Home in just a moment.